Small business financing alternatives to traditional banks. Starting your own business may be a scary yet rewarding experience. While a robust business plan is essential for entrepreneurs, one of the most significant aspects a company has to flourish is money. Financing a startup or small business, on the other hand, may be a tough and time-consuming procedure, especially for people with bad credit. While there is no minimum credit score required to obtain a business loan, lending institutions often consider a range to be acceptable. Consider an alternate loan if you have a poor credit score and no security to provide. What exactly is business financing? Business funding covers a wide range of funding sources used for commercial reasons. Some benefits are short-term, which means they must be repaid within weeks or months. Long-term financing is often used to finance large assets such as real estate or technology. Of course, there's a lot in between. Financing options for businesses. It's a good idea to know what you want before you start looking into small business financing possibilities. Do you require long-term financing? Do you require funds within a few days? Do you need the funds to refinance your debt or to purchase real estate? Remember that many sources of funding not only have varying turnaround periods from request to payout, and they may also impose constraints on how the funds are spent. Before you begin seeking company capital, familiarize yourself with the most prevalent options. Why is it so difficult for small businesses to obtain bank loans? Small business financing finds it challenging to obtain capital for a variety of reasons. Banks are not opposed to lending to small companies. In fact, they want to do so. But financial institutions have an outmoded, labor-intensive lending procedure and rules that are adverse to local shops and smaller companies. Access to capital is made more difficult since many small firms requesting loans are new, and banks normally prefer to see a 5-year profile of a successful company, for example, 5 years of tax data, before making an offer. Small business financing alternatives to traditional banks. If your small business needs funding but does not qualify for a standard bank loan, alternative financing techniques and lenders may be able to satisfy your requirements. Here are some of the best startup and small business financing choices. Financial institutions for community development. According to Jennifer Sporzinski, Executive Vice President for the Company and Workforce Development at Coastal Enterprises Inc., there are thousands of private nonprofit development banks, CDFIs, across the country that all provide capital to small and micro business owners on reasonable terms. CEI. Personal family medical concerns, as well as job losses, can all have a negative influence on a borrower's accounting, but they can all be justified. Furthermore, CDFI lenders do not require nearly as much security as a regular bank. Other factors might substitute for a lack of collateral assets. Investors in venture capital. Venture capitalists, VCs, are an external group that acquires a stake in a firm in exchange for financing. The ownership-to-capital ratios are flexible and typically depend on a company's valuation. This is an excellent option for businesses who lack tangible collateral to serve as a lien for a bank loan, said Sandra Sirks, CEO of Valora Technologies. However, it is only a fit because there is proved strong growth potential and some form of competitive advantage, such as a patent or captive consumer. A VC's advantages are not only financial. A partnership with a VC may give you a wealth of information, industry contacts, and a clear path for your firm. Many entrepreneurs lack the skills required to build a firm. And while they can generate money via sales, understanding how to expand a business will always be a hopeless case in the beginning, said Chris Holder, writer of Tips to Success and CEO and creator of the $100 Million Run Group. The best thing is to seek advice from an experienced investing group since mentorship is essential for everyone. Partner funding: strategic partner funding offered by another participant in your field in exchange for exclusive access to your merchandise, personnel, distribution rights, final sales, or some combination thereof. According to Cirques, this alternative is often overlooked. Strategic finance functions similarly to venture finance in that it is normally a stock sale, not a loan, but it can occasionally be royalty-based, with the partner receiving a percentage of every product sale, she noted. Partner finance is a wonderful option since the firm you associate with is generally a huge corporation, and it may even be in the same or a related sector to yours.